All right, all right. Ladies and gentlemen, this is BYOB Market Talks. Yes, BYOB Market Talks. This is Tasha M. Dyer, Trade Whisperer, and I want to welcome each and every last one of you all. This is the largest economic empowerment movement in the history of mankind, and I am excited because this is BYOB Market Talks. So we start, even though this is training, we are still starting our evening with our affirmations. And what are those affirmations? Because we start with the proper mindset. Okay, I want you all to understand, you have to walk this thing out. We have to walk it out on purpose, okay? We have to be very intentional about what we are designed to do and what we are designed to become and what we want to accomplish. So we're gonna walk it out on purpose. So let's think about that for a minute. I'm a master trader. I am the signal. All my trades end in profit. I am 777. So you have to walk this thing out on purpose. You have to be very intentional about this thing. So now we had some very, very, very distinct questions this morning on this morning's call. We had some very great 777s. We had some very profitable days, right? We had individuals that said, I made my profit. I ended in profit. You know, I met my daily goals. But I mean, 5 o'clock call, 9 o'clock call, we made our daily goals this morning. So, you know, you cashed out today. Let me get 777 in the chat. 777 in the chat. This is how we end the day in excitement, right? This is how we end the day in excitement. So we got some 777 in the chat. I'm excited. This is how I end my day in excitement because you guys cashed out. Now, if this is your first time on a BYOB Market Talks call, your first time here with us this evening, let me get a 111 in the chat. Let me get a 111 in the chat. And if you are still learning how to cash out, let me get a 222. You are still learning how to cash out, let me get a 222. So I see we got some people who cashed out. I see we got some, you still cashed out your first time on Market Talks. That means you was on the live calls though. So welcome, welcome, welcome. Welcome and welcome back. I see we got quite a few people that we are welcoming. Let me welcome you to BYOB Market Talks. So we got quite a few of you all who are still learning how to cash out. So what the request was and what we're going to do this evening, I promised, and hopefully you kept your promise too, is that you guys were gonna go and review last Thursday's training because that kind of geared you up for what we're gonna talk about tonight. And that is really understanding the difference between the tools. So I had some great tools, right? BYOB Cash Out. Of course, we're gonna go over the BYOB Cash Out. Let me go ahead and get my screen share going here. So understanding the BYOB Cash Out, understanding how to utilize the BYOB Cash Out, right? Understanding, you know, what to do and how to trade and, you know, exactly, right, with the BYOB Cash Out. Now, 92% accuracy, you know, it's gonna definitely put you in a great position. But then, you know, when we're sitting here and we're talking about how to maximize, how to put ourselves in that position of profit, you know, how do we take advantage of that? You know, how to take advantage of the tools is really, really good to understand how to utilize the tools, right? How to do that. And we definitely want to be able to use the tools. And so you want to be able to do that. So hopefully you guys were able to go back and watch last Thursday's training. You're on this morning's calls. That's part of what we discussed. So if you have not done that, you know, I want to invite you to do that. I want to invite you to go back and watch last Thursday's training. You understand the market. You understand how the market moves. You'll understand your areas of value that you're going to look at. So that's very, very important. And then you'll understand why the BYOB Cash Out has so much, you know, accuracy attached to the strategy itself. So let's go over the strategy and then we're going to talk about how to maximize these tools. Like how do we use these tools? How do we maximize these tools? You know, how do we do that? So that's where we really, really want to get started today. And of course, if you have questions as we're going through this, if you have any questions as we're doing that, you know, you definitely want to drop it in the chat, because I think as we do this, as we're on this call today, this is definitely going to help you, right? This is definitely going to help you with your trading. It's going to help you understand the way the market moves. It's going to help you increase your profitability. So last Thursday's training is definitely going to help you understand a lot to do with the market. You know, that we also had a lot, you know, of news that came out with the banks last week, and then understanding those types of things, you know. Yeah, I dropped it in the Telegram chat as well. So it would definitely be the last market talks that was uploaded. So definitely. So if you on the YouTube, if you go to the videos and it's the last market talks that was uploaded. So you got it. There it is. So as you go through that, and it would definitely help you. And then we're going to talk about how to use these tools. These tools will really, really help you. But in order for them to help you, you got to know how to use them. And so we've been training on the Vibrata. We even got a playlist on the Vibrata and the BYOB Cashout. We've trained on the Harmonics. We got a playlist, Harmonics and the BYOB Cashout. We even trained on the Bounce Back. We got the Bounce Back and the BYOB Cashout. So now we're going to kind of pull them all together so you understand how to use each one. And so because we want to make sure you kind of maximize and you understand those tools, before we even dive any deeper into, you know, I don't want to take you deeper into other tools that the company has and everything else before we really maximize. And I see some more 777s. This is triple effect. So, right, I just gave y'all 3 tools, right? So triple effect. So we definitely, June is triple effect month. So we definitely are going triple effect. So this is definitely, we're going to take this to the next level, and I want some triple effect on these 777s. And so we're going to just really increase that this month to where you guys really can just elevate that. So let's talk about what the BYOB cash out is. And, you know, just from an understanding standpoint of the strategy, I know I have some 111s. And then, of course, I think it's, you know, we're going to kind of make sure you guys understand how to take some trades and things of that nature as well. So definitely want to maximize all of that too. So let's talk about that. So, and if you got a question while we're going through this, drop it in the chat, drop it in the chat, drop it in the chat, drop it in the chat. And I'm gonna say it again, drop it in the chat. So BYOB cash out. It is 3 indicators, okay? It's 3 indicators. We got our stochastic, and then of course we got our Hikanashi candles, and then the PSAR. Now, the stochastic, okay? You got your stochastic. Now my stochastic, you see that on the side, we're going from 0 to 100, right? We're going from 0 to 100. Now you notice that with this going from 0 to 100, we got that blue line that cross over the red around that 80, or we're gonna have that blue line that cross over the red around that 20. It's either gonna have that cross down, cross over and cross down, or that cross over and cross up. Before I even get there, you notice I'm on a 15-minute chart. Notice I start on a 15-minute chart, but as you advance in your trading, I'm not gonna stay on my 15-minute chart. I can trade any time frame. So I'm gonna start on my 15-minute chart. This is important to understand, okay? This is very, very important to understand. It's important to understand because you are building your account balance. You also, you know, I don't know what your skill set level is and things of that nature. So you wanna make sure that as we're going through this, and that, you know, you wanna make sure that as you're doing this and as you're navigating this market, that you build from the 15-minute chart. So you don't want to get caught in any unnecessary pullbacks and things of that nature. So it's a lot of factors that go into you learning the skill set. You also might not understand where your support and resistance lines are. So I know I can tell you 10 pips and cash out on a 15-minute chart. Until you learn your support and resistance, when you learn, you know, things of that nature, you learn how to build your account balance with proper risk management and all of those other factors that come with it. This is why we begin anybody from trading from the 15-minute chart. Then you can actually build up from there. So I don't want you to think that this is just a scalping strategy, because it is not just a scalping strategy. I want to be very, very clear on that. So if I'm looking at, I'm gonna come here and I'm gonna look at this buy right here. So if I'm looking at this, right, because you can kind of see how this had a nice ride up, okay? You can kind of see that for those of you all who've been looking at this for a minute, you kind of see this was a nice ride up. Now, if I'm looking right here, I got my stochastic, I got my blue line cross over the red and the upward momentum. I got a nice green candle with a flat bottom. Now, I got a nice green candle with a flat bottom, and I got my PSR flip to the bottom. I'm gonna actually put this arrow right here. This arrow, when you're trading, do not put an arrow right there. And I say that because you have something called a pip reaction time. That means how long it takes you to get into the trade. Because when you're actually trading, okay, this is what the market looks like for you. This is what the market looks like for you. I'm gonna say that one more time. This is what the market looks like for you. And I'm telling you that because I said it more than once, because I want you to understand. You stop to put an arrow right here and you think you're about to take a trade, you wasted time, okay? This arrow, you don't need an arrow when you flip in time frames because you know we're looking at its current candle. Now, the reason that arrow is right there, because we're looking at this candle, but this is already played out. This is what current time would look like. I wouldn't need an arrow if we were looking at it like that, but it's already played out. So we have to be able to look at it and flip time zone and flip from the, I said time zone, and flip to the 5 minute and flip to the 1 hour, and all of us be able to look at the same thing. So that's why that arrow is there. So I'm gonna drop down to the 5 minute for time frame confluence. When I drop down to the 5 minutes, understand that it needs to still be buying. Okay, on what now? Understand the 15 minute is the only time frame where everything has to be met. That's the time frame where everything has to be met. Okay, because that's the time frame I'm trading on. When I drop down to the 5 minute, of course, I'm looking for things to still be met on the 5 minute, but my 5 minute might have a wick pointing at the bottom. The 5 minute, you know, it might still, like, let's say this one had a wick. Like, let's say this is what it looked like. What I'm looking for is it to still be buying, okay? I'm looking for it to still be buying. So if it's still buying, that's what I'm looking for. So I need it to still be buying. So that's what I mean about that 15 minute, because I'm trading on the 15 is where I'm really looking for it to have everything that I'm looking for. Because all this means is I got a little bit of pullback, you know, but I really need to see what's happening in the grand scheme of things, right? Now, is my stochastic still pointed up? What would be happening? So as long as it's not red or it's not pointed down or, you know, something like that, but I would prefer it to be looking like this. Of course, you have a preference, a stronger, if it's like, look at this. Like I got a nice strong green candle like I do right here. I got my PSR down here at the bottom. This is what time frame confluence is. This is what I need. Then if I jump up to my hour, when I go to my hour, okay, when I get up to my hour, and when I go to my hour, I need it to look like something I will put on my watch list, okay? A watch list meaning that it's something that I'm looking at, something that I'm looking to happen in a minute, something that I would definitely go to trade. So this is where it becomes an art and not a science. So, you know, you have to, and this is why you want to understand the strategy and not memorize it, as we talked about last week. So as I'm looking at this, okay, I can see on this hour that this actually is coming out of a correction. Obviously, this was that news candle that happened last night, but this is coming out of a correction, right? This is what we know that the market is always impacted by the news, but we don't trade the news because the market is going to correct itself. But let's say the news didn't happen. This was just a small correction, right? Because it would have looked like this, or it would have looked like this one. It looks like this because of the news. Or because if it wasn't for that, it would have looked like this one, or this one. So if it would have looked like any one of these, even this one, we know you got to be able to look left and kind of see what was happening, what was going on. Or we can kind of see that we've been in this nice uptrend, right? Because we wouldn't see the stuff to the right. This is what we would be looking at. we can kind of see what was transpiring. Does this look like something I will put on my watch list? Does this look like something that I would actually be about to trade? Does it look like something like that? That is when you say, okay, I'm comfortable enough to take the trade. Do I get my 10 pips and cash out? If you understand your support and resistance lines, right? You understand those support and resistance lines, then you know that you can trade it to that next resistance lines, giving you more than 10 pips. Now, if I know that my 1 hour is my swing of the market, if I check my 4 hour is my trend of the market, okay? I'm throwing something else extra in there for you guys. I've talked about it before, but I'm gonna give it to my 222s and my 333s. If you're a 111 and you're just learning a strategy, grab your 10 pips and cash out. For my more advanced traders, if you want to be able to ride this out, right, what we've been talking about, I kind of pulled back a little bit from this a little bit because, you know, we've actually had, you know, when the market shifted, I showed you guys how to trade it on higher time frames. But if I check my hour and my 4 hour after the correction, you know that I can trade to my higher time frames where I can ride this out, because my hour is my swing of the market, my 4 hour is my trend of the market, meaning that if my 4 hour is confluent as well, I can actually trade this a little bit longer. I can trade this and I can go higher with my zones. So that is the BYOB cash out. So we do have videos on that. We can go a little bit deeper if I have questions on this, if after we get into what tonight's training is about, if we do have some more questions on this a little bit later. So I just wanted to make sure we covered this as well. So, but I do want to make sure that everybody understands the BYOB cash out, because that's going to help as we get into these tools. So let's talk about, okay, there's 2 lines. I don't know what the 2 lines mean. So let's talk about some of these tools. So the first one that I'm going to actually bring up is the Harmonics scanner, right? That's one of the first ones that we went over. So one of the trades, and I'm actually using a trade that some of you guys might still be in, because if you might still be in a GBP USD, right? Some of you guys might still be in that one. Now, if you are still in this one, right, you might still be in this one. So I know that GBP USD, right, was actually called on a harmonic scanner. Now, if you come over here, you can kind of see I got that same setup over here. And I actually put their lines on here, except I did pull this one down a little bit, that take profit 3. I pulled this one down just a little bit right here, okay? So now, if you know from my training, how do I get to the scanner? Good question. So the harmonic scanner, you go into all of your tools. Everything is combined and collaborated in im.center, okay? Everything is combined and collaborated into im.center. You go into im.center. When you get into im, matter of fact, hold on. im.center, you log in. So when you come into im.center, you log in, you come down here to strategies, right? When you come down here to strategies, you come down here, you got your FRX, your HFX, you got your different academies, right? You have your different academies. When you come down here to your academies, right here, it says Harmonics. Now, this is the Harmonics. This is the one I go to. But like let's say for my Vibrata, I actually go to imlwebanalyzer.com, right? So you can actually go to imlharmonicscanner.com, but this is the one that you're looking at right here. You just come in here and click Harmonics. So that's the one that I'm actually on, and it'll pull it up in a different window, and this is what it looks like. So I'm actually on the hour. You just grab a broker. You got different brokers to choose from, and it doesn't matter. It's really the broker doesn't matter. So, and you just come in here and you just grab a currency, right? And what these currencies do, so you understand what these do is they actually scan the market looking for harmonic patterns. So if you look in your training in the 300 or 400 level training, they actually talk about the harmonic patterns in the market. So they actually have the harmonic patterns in the market. And so instead of you having to go try to identify those harmonic patterns, like if you see that this is actually a harmonic pattern in the market. Now, what happens is you don't trade this. Do not, please, 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 please do not try to trade this without bringing it back to the Vibrata and putting a strategy on top of it. Because just because it's a harmonic pattern in the market does not mean it's going to play out or that's when you get in the market. And we've gotten testimony after testimony of people saying thank you for that, because this is how this works, so we can understand these tools, right? Let's talk about these tools. This is how this works. So when you look at this, the ones that are down here, every currency that scans the market, that's gonna scan the market, is gonna identify the harmonic patterns. The older ones are gonna be down here, right? They finish playing out, or you know, they actually it should be the older ones down here. I know in the other one, that's where they are. So the older ones, like they play out. So you can kind of see where they played out, and then they'll eventually fall off. So you can kind of see where they played out and they've hit their take profit 3 and they're still on there. Okay, so they've hit take profit 3 and they're still on there. They've all played out down there at the bottom. They played out. So then you start getting the newer ones that are actually at the top. Now, understand this, if every single one that's had a harmonic pattern scan was on there, we would not have room for every pattern. So if they do not play out, they are no longer available on here. Matter of fact, there are some that I saw earlier that are no longer on here anymore. I know for a fact because I wrote them down to actually look at them. They're not there anymore. So I just want to make that clear that they have some that are not there anymore, even from this morning. So so that's not to say that anything is different or wrong. It's just that they just didn't play out. So that's why it's important to turn around and take this back, right? Take this back to the Vibrata, and you want to take this and you want to line it up and you want to put the BYOB Cashout on top of it, right? That's what you want to do. You got to bring it back and put the strategy on top of it, because that's going to tell you if it's going to play out. So you can actually see, like you can literally see the harmonic pattern in the market when you do that. But if I don't get confluence, right? If I don't get confluence, you know, because honestly, if you look at this, you know, is your naked eye see the harmonic pattern? But at the same time, now that you know it's there, when I'm looking for it, right? So let the tools, this is how we work smarter and not harder. Let the tools find a harmonic pattern for you, bring it back over here. You got it marked up, right? You check all of that. So they say enter, you know, we've made some adjustments. We don't enter right there because we know we're going to do this the smart way. And I know I got my blue line cross over the red in the upward motion, blue line cross over the red in the upward momentum. Then I got a green candle with a flat bottom and a PR flip to the bottom, right? Green candle with a flat bottom, PR flip to the bottom. So I'm gonna put this right here. I'm gonna put this right here, okay? I'm gonna put it right there. I'm gonna put it right there. Now, let's check our confluence, okay? We got confluence right there on that 4 hour, okay? Let's drop down to the 15. When we drop down to the 15, we got confluence right here. So that drop down, we still drop down. We still drop down. So nothing has changed. And then even right here, where did it go? When I'm looking at it, like what did I tell you about the trend line? Let me get rid of this for a second. Just to kind of show you, when we talked about drawing trend lines, even though these are trend candles, so let's draw a trend line here, right? Let's draw a trend line so you can kind of see, and I'm gonna fix that one because that one's kind of ugly, right? So you can get in it right there. But if I waited, you waiting on that pullback to happen, because what did I tell you it always come back and do? It always come back and retest. But you missing out because that was a lot of movement right there. So I'm gonna take this one off of there because some of you guys like visuals, right? Some of you guys like visuals. But look at this. Look right here. So if you would have caught that movement, even if you went to take profit one, just catching that movement from that entry point right here to take profit one, that's right there. Look at how many pips that is. That's 112 pips. So look at the movement that you got right there, just on that by using the tools. Just by using the tools. Bringing it back over here, just by using the tools. And so if you stayed in it, right, because we got some pullback, right? We got some pullback, right? Pulled it back to 75 and up to take profit two. Now you at 166. So when I ask you guys, I'm like, anybody still riding GBP USD other than me? You know, anybody other than me? Because I'm still riding it. So anybody other than me still riding GBP USD, right? This is what I mean. So, and then you look at it. So it has the, we got somebody is riding the wave. I'm so excited. There we go. So somebody got back in the water. Okay. Y'all get me excited. So when I look at this, okay, and you look at it, and now look at, you got almost a 300 pip ride just off of that on that GBP that you got a potential to go up to. So whether you are a take profit one or a take profit two person, whether you are just a take profit one or a take profit two person, that's fine. That's okay, because take profit one would have did you well. Somebody's like goals. Yes, goals, daily goals. And that's how we hit those daily goals this morning, right? Because that was you said, I made my goals for the day, I'm done. So you hit your goals and you were done. So you were done. You were done. You were done. So one thing you got to know is if you, with GBP, and that's a good question. So one thing, like if you do, GBP has some strong pullbacks. Remember, I tell you guys all the time, GBP is that kid you don't leave home at all. GBP is that kid you don't leave home by yourself. GBP is that kid that you just, you don't leave home. So let me show you. That's a good question because I'm using GBP as my example for both of them. So hold tight. I'm about to use GBP for my bounce back example as well. I'm definitely going to use it for my bounce back example. So yeah, yes, they do, but they're worth the ride. They are. And that's why I use them, because even this pullback right here alone is like at least a 50, 60 pip pullback. Oh, it's a private. Oops, I didn't say it was private. So when you go for a longer trade and you don't secure your profits and there's a pullback, do you lose your previous profit? No, not necessarily going to lose your previous profit, but this is where you're going to begin to understand, or this is where you're going to begin to, this is where you begin to develop that relationship with the market, or you begin to develop a relationship with those currency pairs, right? This is where you actually begin to understand the movement. So just like you have more than one child, so you begin to understand, so you know how child one is going to act or child two is going to act, and so GBP is going to give you some significant pullback. GBP is not just going to like just smoothly ride this thing on up. It's just not. AUD might smoothly ride this thing on up or ride it down. That's so you just know it's not. So you just have to ride the wave and you just have to be ready to ride it out, because it's what it's going to do, and that's what GBP does. So it may be a dumb question, but yes, I did that on the hour. If you enter and it heads in the wrong direction after analysis, what is the best advice on how to get in and out? I always set my stop loss and my take profit. So when I do my analysis based on the time frame, I do this is why we bring everything back to here and do the BYOB cash out. This is exactly why we do that and time frame confluence. If you're doing that, then you're not second guessing yourself. It's no second guessing. So it's not like you and you probably been trading before, and you probably been trading price action. You might have been trading some of those things. You're not gonna have those issues because what I'm showing you, literally, you would have to look at that candle, like where that yellow candle is right here. You would literally have to look at this and say, I'm gonna take a sell right here. You would have to intentionally take the trade the wrong direction because I'm looking at a green candle with a flat bottom and my PSR is pointed up. So, and literally looking at this with confluence on the 4 hour, and then I drop down and I got confluence all the way around. Now, literally. So you would have to look at this and say, I am going to take this, right? I am going to take this and I'm going to take this and I'm going to take a sale right here. That's what you would do. So that's literally what you would do. So, but for sometimes the market, like I said, it's 92%, which means that there is an 8%. So there is an 8%. Okay, there is an 8%. So if there is an 8%, that means that that's why we use proper risk management. So we use proper risk management. And if you're using proper risk management, which includes a stop loss, right? That includes a stop loss, okay? If I'm doing that, then if I am doing that and I'm using proper risk management, having proper lot sizes and using my stop loss, then you are going to be fine if something happens, like the market turns around, we get that news spike or something like that. So yeah, so let's go ahead and I'm gonna use this same trade to talk about that bounce back. So the trade from this morning, this is a specific training call. So if I get a chance, because I got 2 other things I have to cover on tonight. So this is very specific to training. So if I get a chance to cover trades from this morning, then I will, but this is very, very, very specific. So time frame confluence, like I said at the beginning, I will go back over that stuff again at the end if we get time. That's why I covered in the beginning. So yes, I will. Private, you got sales. Okay, I'm not gonna mention your name, but I am gonna talk about this because I think that this is important, because I know other people have done this. So, I know people have done this. So when you enter your stop loss, right? When you enter your stop loss, and because you're not the first person that said this to me, when you enter your stop loss, when you do this and you practice that proper risk management, and you know what? I'm probably gonna pull that other one up if we get a minute, just because of this. So when you do that, just because of some of the things that we talked about last week, when we entered this, okay, when you enter the trade, do not do that, because when this PSR flips, think about this PSR. This PSR is a trailing stop loss. That means momentum shifts, okay? That means momentum shifts. Momentum shifts. So when momentum shifts, that means that this is a trailing stop loss that moves with it. So we don't have to hope and guess, right? Yeah, if you, well, not this one, because you're down here. And I think you had another question. I'm gonna come back to it. So not this one. So you would have been down here somewhere. And I'll give you guys another kind of trick that I use, okay? So you got momentum. So down here, and this will answer a few of you guys' questions. So you got momentum down here. This is a trailing stop loss. Do not move your stop loss. Do not move your stop loss thinking that maybe the trade will turn around. When you do your proper analysis, there is no such thing as hoping, wishing, and praying that your trade will turn around, okay? We're not hoping, wishing, and praying that the trade will turn around. You know, you notice that the market, if you actually analyze this and it does it in the right direction, in the right way, then you see that you can actually read the market and it talks to you. So, and for me, if I'm taking longer trades, I've said it before, and so just so you guys can see, I jump up a time frame, and this is where I cushion my stop loss. So I always jump up a time frame. Remember, you can have as much as you want. So I jump up a time frame, and you notice that my trailing stop loss, I trail my stop loss outside of I jump up a time frame. So you notice that my trailing stop loss will be outside of my PSAR on a higher time frame. This is where mine would be. So if I'm trailing my stop loss, I jump up a time frame and it's always outside of here. So if I'm on a 15, I would jump up to the hour. If I'm on the hour, I jump up to the 4 hour. And you can see that I would have never got popped out of my trade. I never got popped out of my trade. Then another thing, because I want to get to these other two tools really quickly, and I'm looking at the time. The other thing is that when you look at, you say GU and GJ. So remember, you got your base currency and your counter currency. That's why I say I want you guys to go back to last Thursday's training. You got a base currency and your counter currency. If your base currency is strong, then you're buying. If your counter currency is strong, then you're selling. If you're in your base currency for a buy, and if GBP is the base currency in both of those currencies you mentioned, GBP USD and GBP JPY. GBP is the strong currency, GBP USD and GBP JPY. So if GBP is strong, right, then you can't look for GBP to be a long sale. So that's a good thing to mention because it's going to take us into where we're going next. GBP is that base currency that's strong, right? Overall, really strong. So if this is my strong currency, then that's my base currency. What you're doing is you're counter trend trade. It's like you're taking one currency and saying it's like you're trading against it. So my base currency is GBP, but then you're saying one is gonna buy, but then I'm saying one is gonna sell. So either GBP is strong or it's not. So you're saying it's either strong or it's not. So it can't be both, if you get what I'm saying. So GBP is my base currency. So if GBP is strong, then it's strong. But I can't look for my either USD is strong and it's gonna sell, or JPY is strong and it's gonna sell. But if GBP is strong, then I'm looking for my GBPs to buy. So you can't be in like a buy for GBP USD and a sell for GBP JPY. So you shouldn't be in one in a buy and one in a sell, if that makes sense. And so just to kind of go to where we are, I'm gonna drop back down to my hour. So, and I'm gonna show you what the bounce back called, because you can, and this is where you gotta make the decision, do you, because what happened is, like what the bounce back called, that's what that GJ trade was earlier. And so that should not have been a long-term trade, just like this. And if I circle this, right? If you got something, make sure you guys stay muted. There we go. Just drop it in the chat. So let's talk about this right here. So if I look at the bounce back tool, right? Now what this tool is designed to do, designed to do is it identifies trends in a market. So if you think about the trends that are about to have a break in it, okay? You think about the trends that are about to have a break, okay? So these are bounce backs. It's like all of the trends that are about to have a break. So same thing. This GBP, right? USD, it called a sell, right? It called a sell, and it's right here. And so this is where this is. So I already got the information. So let me go ahead and put this on this same thing right here. I want to kind of show you. Let me drop it right here. Let me change the color so we don't mix it up. And I'm gonna put the number in there. Let me show you how this works. And I'm glad it's on the same. I'm glad it's on the same thing. So on the same currency, so I can show you exactly what I mean by that. Okay, I want to show you exactly what I mean. Now, here we go. All right, so this is when this was called right here, okay? So basically the bounce back called this for a sale. Now, I've shown you on the bounce back training where you can grab it up to 150 pips, but you can also, the standard bounce back is like 20 or 30 pips, right? 20 or 30 pips. So how many pips you gather standard on each one is at least 20 or 30. You can get more if it's with the trend. So you don't know, once again, that whole standard is, are we counter trend trading or are we trend trading? So that's the thing you have to identify. So we already know based on what the harmonic is called. And if I look at my 4 hour, what's my 4 hour doing? Remember what I just told you at the beginning. The 4 hour is the trend. The hour is the swing. The 4 hour is my trend of the market. My trend of the market is in a buy. My overall trend of the market is in a buy. So yes, we had some pullback, but my overall trend of the market is in a buy. So when I look at this bounce back call, right? When I look at this is nothing more than it's going to be some correction, okay? So let me put my trend of the market on. Let me put my trend line on here, okay? This is my trend line. So when I look at that trend line getting broke, what happens is you drop down to the 15 minute. I drop down to the 15 minute. Basically, you be trading this off the 15 minute. So when you take this trade, which some of you guys did, because some of you guys cashed out on this morning, you looking at you look in the Telegram, it's a lot of GBP USD 777, 777, 777, 777 in the chat, 777 in the chat, right? It's a lot of 777 in the chat. So, but the bounce back called that. So whether you took it here or you took it here, because it always breaks, retests. Let me pull this up. It always breaks, retests, and then comes back down. And with the trend, as always, it breaks, retests, and pulls down. So this is what you guys traded, right? This is literally what happened. This is that trade. And that, because it's GBP, that's like 65 pips. Because it's GBP. If it was anything else, it would have been about 30 pips, right? GBP is GBP. That's just GBP. So right there is your trade. That's your bounce back trade. So the bounce back tool identifies breaks in a trend. You're looking for breaks in a trend. So this is where it called it. This is where this red line is where it identified a sell. So you knew it was coming because it identifies a break for the trend. So that's what that tool is calling, okay? That's what that tool is calling. Now, my harmonic scanner is looking for harmonic patterns. So you're still in a trade for the overall harmonic pattern for a buy. In the middle of my buy, I got a pullback for a sale where you got 60 something pips. And then it turned around and it went back for a buy. So what happened, that GBP JPY did the same thing. You got a correction, for a sale. And if you stayed in it looking for more than that, you got caught up and it went up. is going back, because the stronger currency is that GBP. So like if you would have tried to stay in this for a sale, it would have turned back around on you and it'd be going back up right now. So this, you really need to understand where you are in the market. So my 4 hour is my trend in the market. You can kind of see what's happening. This is my actual trend in the market. So this is where we are right now. So these are your different tools. So these are two of your tools, right? But we got one more because it's triple effect, okay? Now, using the same currency, I can tell you what the Vibrata would do, okay? Let me see if there are any on here. Wow, look right here, a potential buy. I'm gonna pause this. A potential buy. I didn't even. Wow, I gotta spend more time with these tools. Yep. So here's a potential buy, okay? 47 minutes ago. I'm gonna just drop this on here. Look at here, look at here. I'm gonna change this color to green. One, 2, 5, 2, 9, 4, right here. So did I do that right? Hold on, ain't no way. Where'd it go? It's way up here, right? It's called it way up here. That's it. That's on that red. Okay, so it's right there. So so it's right here. So can you put an additional trade for the bounce back? Absolutely. So hold on. So it caught it right here. So look, 47 minutes ago, it caught it right here where it kind of got consolidated. And then, so let me get the time that it called it at 1 UTC. Now, and it called it on the 15-minute, right? So I'm gonna check, what I always do is check my hour for confluence, okay? I always check my hour for the confluence, because if I'm on a 15-minute, my confluence is the hour. So now, we already know that we in a buy. We already know we're in a harmonic pattern. We already know that. So if I drop down to the 15, I already know that, right? I already know that when I drop down to the 15, it called a buy, but what am I in? I'm in a correction, right? It calls it in a correction. It always identified in a correction. So one of the things that I told you guys on last Thursday's training was, how does a vibrato work? Because I can guarantee you that if I keep pulling down, I'm gonna find another one where GBP USD was called again. And I did right here on the 5-minute, hour and 22 minutes ago. I can keep going, and I'm gonna find another one hour and 42 minutes ago on I'm gonna keep finding GBP USD. If I uncheck, let me unpause it. If I check just the hour, I'm gonna find a GBP USD somewhere in here, because it's gonna call it somewhere in there on the hour as well. I'm gonna have a GBP USD up in here somewhere, because it's been in an uptrend. I can guarantee you, but for the sake of time, I'm not gonna do it. Let me walk you through this, okay? So it just called it again. Let me put this circle on here, because this is where we got that entry trigger. You want to understand entry triggers? That's in last Thursday's training. So this is an entry trigger that's identified. And you already know that it's going to have that entry trigger. It calls it in that pullback, but my trend in the market is actually in that buy. Now, this is what I do want you to understand about what's happening right now. This is definitely what I want you to understand about the difference in a vibrata, though. This is the difference in a vibrata. The vibrata, every time you see, you have to, with the vibrata, you got to know where you are in the market, because what the vibrata is going to do, every time you get an entry trigger, the vibrata triggered it here. At the end of this bounce back trade, the vibrata triggers it here. The vibrata is going to trigger it here. The vibrata is going to trigger it here. The vibrata is going to alert you here. You're going to get a vibrata alert here. You'll get a vibrata alert here. You'll get one right here. The vibrata, every single time you get at a support and resistance line, every single time you get a correction, every single time it hits that, the vibrata is going to send you an alert. So this is why this morning I made the comment with the vibrata, I trade zone to zone because I'm zone to zone on the vibrata. But what you have to understand is where you are in the market. So that's key with the vibrata, because if I pull a trade, and I think we did some this morning, and I was like, we're not going to take that trade because when you look to the left, there was one that was caught on the 5 minute. I was like, it's serious scalping. But if I look to the left, if we look to the left, where were we going? It wasn't anywhere to go up because the trade was at a turnaround point. So right here, for example, if it had triggered a sell right here, I would not take a sell because I know I'm at a turnaround point. You got to be able to look to your left and see where you are in the market. So if I know that I'm at a turnaround point, but I also know that if I've been here in a down sell, right, in a sell, my trend is in a sell. If I know that, then I'm looking down and you can see what's transpiring. So I know that I'm in a sell, so I know I'm a trigger here. I know that I'm in a buy, so I know I'm a trigger, right? You know you're going to trigger. So of course I'm going to take that buy. I know that this is still going up. If I look left, even if I had looked at the harmonic scanner, I know that I'm still buying. Look to my left. I know that I'm still buying when I check my confluence. I know that. So here's my next zone. So I know my take profit will be somewhere up here when I look left. I know that to be true. So I know that. So this is how you trade the vibrata. The vibrata is going to get you zone to zone. I know here I would have went zone to zone. I know here I'm going zone to zone. I know here I'm going zone to zone. I'm going to get another trigger up in here. Vibrata going to trigger you again up in here. And I'm going to go zone to zone. So that's how you use the vibrata. Okay, the vibrata, that's why you see alerts coming all day, all day, all day. Trades, alerts, all day. That's why they're always coming. Zone to zone. Let's go get it. So those are the 3 tools. Triple effect is triple effect in June. 3 tools, right? Triple effect. Questions, comments, testimonies. Questions, comments, testimonies. You are welcome for the clarification. You are very welcome. Questions, comments, testimonies. You are welcome. You say great clarification. This was so good. You are so welcome. Yes, absolutely. 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 Do you use the alerts to trade? Absolutely. Do you mention at the beginning the BYOB playlist site? On the BYOB challenge, on the BYOB challenge YouTube channel. So what I've done in the past is I've gone over trade, I've Harmonics in the BYOB cash out, the bounce back in the BYOB cash out, the vibrata in the BYOB cash out. And so I wanted to clarify today, I got playlists on the BYOB challenge YouTube channel. So I wanted to clarify today because I still had some questions on this morning's call, what each tool was and how to use it. No, I'm not switching strategies. The only strategy I trade with is BYOB cash out. That's it. I created the BYOB cash out. The only strategy I use is BYOB cash out. That's it. That's it. I'm understanding so much more with you. You are so welcome. And for clarification, once again, I don't use any other strategy other than BYOB cash out. But we maximize the tools. We use the tools that IM has. So we trade smarter and not harder. You need to replay this 3 times. It'll be uploaded soon. This was very clear. So many tools. So glad it was clear. I'm so happy. So happy. Thank you very much. This analysis. Now you're gonna go live. Good. Oh, I'm so happy. Go live. Go live. Go live. So hurry up and get it uploaded. I got it. I got you. I got you. Based on the stochastic. So entry is always based on the stochastic. Oh, based on the stochastic, let me help you with that. So just to be clear too, look at this, your stochastic right here, okay? Your stochastic, the trade started down here. So even though it called it up here, right? Even though it called it right here. So understand, and this is where you gotta be comfortable. You gotta be comfortable. So this is literally after a correction, okay? This is literally after a correction. So if you're not comfortable taking the trade there, so I get the question all the time, can I get in a trade? Did I miss it? Can we still enter the trade, right? Look at this. This is where the trade began. It began down here. You got that, right? Impulse, correction, continuation, correction, continuation, correction, continuation. So the stochastic does not always come all the way back down. It does not always do that. This time it came almost always, almost, but that was after that significant, that was a significant correction. This one wasn't very significant. So it's still up here. So if you're not comfortable, this is where the market talks to you, it speaks to you. If you're not comfortable re-entering a trade right there, don't do it, right? If you only want to grab a trade from right here, so only take trades you're comfortable with, okay? Only take trades you're comfortable with. So only take trades you're comfortable with. Only take trades you're comfortable with. Oh, when I say playlist for trades, that's just playlists. Like we create trade playlists. Like, so I'll make up a word in a heartbeat. So y'all will get to know me very well. I will make up a word in a heartbeat. The bounce back is IML Bounce Back, IMLBounceback.com, IMLBounceback.com, IMLBounceback.com. That's what that is. You're gonna set your alarm and stay tuned. Awesome. So bounce back, a lot of questions on that. IMLBounceback.com. And yes, zone to zone means support and resistance, support and resistance. Support and resistance, support and resistance. Yeah, so after the correction, you enter the trade. After the correction. So this is the last question because we got a transition. So you got impulse, correction, continuation, correction, continuation. All those corrections happen at support and resistance lines. All those corrections happen at support and resistance lines. So I tell you all the time, you gotta get those support and resistance lines. So you gotta get those support and resistance lines. So yes, BYOB challenge, BYOB challenge. Mr. Rogers, can you drop that YouTube channel? BYOB challenge is our YouTube channel for the 111s, the 222s, and the 333s. Everything you need, BYOB challenge. It's all right there on the YouTube challenge, on the YouTube channel. And yes, BYOB for life. Yes, BYOB for life. But ladies and gentlemen, it is definitely time to transition this call because we will keep going forever and keep going and keep going and keep going all night. But it is time to transition this call. I love you. I love you. I love you. But we got to transition. So, but stay tuned because we are going to help you understand